Okay, now that you know what an index fund is, this is the video where we're going to be going over how to look at different index funds and where to go to actually buy your first index fund. So I'm going to share my screen. Once again, we're going to dive right in and I'm going to show you guys where you can go in Vanguard. Okay, so I'm actually logged in to Vanguard.com right now, and I've set up the account. And so that's what you want to do. Remember, go through that process to make sure you have your account set up in the right way. And then here you can see the different types of choices you have. You can actually go to transaction if you're ready to buy. You can go right to buy and sell, or you can transfer some cash if you need to. The first thing I want to show you is the products and services that they offer. And so you can see here that they do actually offer a wide range of choices of things that you can get into to find different types of index funds and mutual funds. You'll want to click on mutual fund to look at that page. And that's where we're at right now. And so I just wanted to show you this really quickly so that you can get an idea. This is a great tool that you have at your disposal if you become a part of Vanguard or even Fidelity. They have a page like this where you can go in and look at the different products that they offer for you to choose from. So I want you to scroll down to this section here and take a look at this with me. There are different categories here, and I kind of want to go through them really quickly with you to give you an idea of what's available to you. Index funds is where I like to focus because of the diversification. They're easy. They usually have low costs, and they're very simple, as a product. And so we're going to click on that next. But I want to go through these other choices just so you understand what you have available to you. You do have the choice of actively managed funds, and these are basically like they have a little bit more cost. Remember that expense ratio that I showed you on the chart on the Yahoo Finance page? These are actually more managed by a team. So index funds tend to be more just following or mimicking the index that you see online. Whereas an actively managed fund has a team of people who are all kind of like trying to beat the markets, and do really well. So you can look at those different funds that are available to you as well. They tend to cost more. And in my opinion, I don't know, people trying to, do better than the market never really pans out, in my opinion. But you can definitely take a look at those and see. That's just my opinion. Again, disclaimer, I'm not an expert, right? These people are experts. This is what they do all day long. But I like that there's low cost in the index funds, and I like just being able to know that it's following an index and that's very easy. But you do have that at your disposal. These are actively managed funds. Then there's the target retirement funds. Now, these are going to have a name associated with a target date in the future for you to retire. So let's say you're going to retire in 2035. You can find a fund in this selection of funds that will come close to that date for you. And they have fund managers who are rebalancing that target date fund. As you get older, the risk will come down. So they'll invest in the long run, when you first start and it's got further time away, they're going to be investing in things that are more risky. And then over time, that risk is going to come down and they're going to invest in things that are less risky, like bonds, that sort of thing. And those are a blend, okay? So they have stocks in them that, are going to start off like really high and risky things and then, become lower over time, if that makes sense. So you can pick the target date that you want to retire and just let a manager say, pick that for you. I've tried those in the past too. I find that I like actually having, I have a higher risk tolerance for me personally. And so I tend to go with the index funds over these. So, but it's really, again, your choice. The ESG funds are interesting. This is kind of becoming a new kind of fashionable thing. Um, Environmental, social, and governance funds that let you invest in things based on what you prefer. So if you're very intentional about the environment, you can pick a fund that aligns with that for you. Okay. So again, I want to click on index funds. That's our focus here. And I want you to see here that you can just start scrolling and you can see the choices right away here that you have available to you. And the ticker symbols are right above each of those. So you can take that ticker symbol and put it into Yahoo Finance on that search bar and see more detail, about the fund for yourself. What I want you to see is on the far right, investment minimum. This shows you how much you need to get into the fund. Now at Fidelity, they tend to allow you to get into the funds with less requirement. So I want you to know that as a benefit of Fidelity, but you can also do this at Vanguard by investing in ETFs, which are exchange traded funds. And they are like index funds in a sense, but they almost act more like a stock. So you can trade in and out in a day with an ETF. And usually as long as you have $1, you can buy an ETF. There's usually an index fund that matches an ETF, and you can find those. So if you like the Vanguard 500 index fund, there's an ETF that you can purchase that's also like this 500 index fund. Okay, so you could start off in ETFs if you don't, say, have $3,000 to get into this fund right away. So you could get into ETFs, and we're going to do that in a video coming up. We're going to talk about ETFs. But for now, I just want you to look at these choices for the index funds and their minimums. So some of them have really high, look at this, like 5 million is that minimum to get in. So some of them have really high minimums to get into. And also, there's so many different choices here. I don't want you to get too confused again, and I don't want you to get overwhelmed by this, but I want you to see that you do have many choices at your disposal with index funds, and there's ones that are international. There are some that are like more for social, global. I mean, here it's just like the growth oriented, healthcare oriented, informational. There's probably going to be like technology based ones. There's all kinds of them here. But I want you to know, for simplicity's sake, that the 500 index fund is very popular fund to get into. And anything like a growth index fund also will be very popular. And what I would recommend doing is researching just a couple of these and see which one, appeals to you. But remember, you can also look at kind of this asset class, the next section over, there are going to be some that are balanced. Balance is going to mean less risk. Some are going to be more stock based. That's going to have higher risk. Okay. And international says what it is. That means it's, based internationally. All right. I'm looking to see if there's any other choices. Some have a mid cap. That's usually kind of a middle risk. So there's different types here, for you to take a look at. Also, if you see, they've got I think this is the expense ratio. Yeah. So you can also see the expense ratio in there. When you're ready to buy, you simply click the buy button and it will take you to a little box, like a little way for you to start investing. Okay, so you're going to go and it's going to ask for which account. That's from your accounts. Which account? So I'm not going to show this because it will show my account numbers if I do that. But you can click on that and it will you can choose which account you want to put this, have the fund invested in. And so you just choose that account and then it's going to ask for the next questions like how much, you want to put in. So it'll go through a series of questions with you and you simply go through that process. And as long as you have the funds already moved over from your bank into the holding account, which is usually like a money market account, then you're good to go. You're ready to invest. Okay. So I want you to take this first step. I'm encouraging you while you're watching this video, just after watching this, to go ahead and choose a fund that you would like to get invested in and to go ahead and take your first step with this. Now, if you found out again that you don't hit the minimum, then in a video or two next, we're going to go over ETFs. You'll have the opportunity to invest in an ETF instead, if you like. And that would be a very, very easy way to get into the market very simply. All right. So I can't wait for you to take this step. It's such a big one. To finally choose the fund. Now, remember, you can go into that list of funds that we were looking at, and you can take the ticker symbols and you can bring them over into your Yahoo Finance app and take a better look at them. I believe also you can click on these links here. And I think it will take you, it'll give you a little bit more detail here into the fund, and you can look at more details here, all about it. So this is also another way for you to take a look and see all of the expenses, and you can do your research. They generally will also send you a packet all about this fund. They used to send it in the mail, old-fashioned way. But now I believe it's by email and through like PDF, like links now. So you can get all of your info about the fund, and that's a disclosure, that they have to do with you. All right. So I'm encouraging you to take that step. I'm so excited for you, and I'll see you in the next video.